Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. We're going to start the week taking a look, as always, at the headline US indices and identify some potential action areas for the trading week ahead, starting with the S&P 500 using the emini futures contract. So you can adjust the levels I'm providing for the emini futures by calculating the spread between the US 500 and the futures contract. So it's currently, the spread is about 60 points. So you want to deduct 60 points from the levels I provide here on the E-mini futures contract to give you the same levels in the spot cash index, and you can do the same obviously for the Nasdaq and the Dow Jones. So looking at the S&P 500, heading into the back end of last week, we were looking on Friday for a test of the 5170 to 5180 area to provide some initial support. We've seen a decent bounce into the bull bear zone that we're going to use for the week ahead, which is going to be 52.20 to 52.30. Now, watching for bearish reversal patterns in this zone to add to existing short exposure, looking for a move back down to get a test of the trend line support. We have a potential triangle developing here. So key test is going to be back down, looking at bids into that 51.75. Now, if we find demand there again, we want to be looking on the long side for a break through the 52.30 to target the triangle resistance up to 52.50. Through there, we have upside objectives then at 52.84, 52.95 is the weekly R2. And just above there, we have monthly and weekly projected range resistance just above the 53 handle. The alternative scenario is we don't find sufficient supply here in the bull bear zone and extend higher. So on acceptance above the 52.30 area, we watch for some consolidation and a break to the upside with the same upside objectives in mind. The bearish scenario would be that we trade into the top side of the triangle and get rejected again, and then we'd be looking for a deeper corrective move to the downside, certainly thinking about 51.40 and 51.30 as immediate downside objectives if we maintain resistance into the top side of the triangle, or we get a sharp rejection from the bull bear zone and don't find the anticipated bids into that 51.70. That would again look at for a move down into the 51.30, 51.40. From there again, we could see a tradable bounce. Moving to the Nasdaq, key event risk today with respect to the Nasdaq is going to be the Nvidia press conference being held later today after I think it's 1 p.m. Pacific time, and market anticipates good news coming out of that conference. Now, if there are any undertones of bearishness from that conference with respect to Nvidia's pipeline, etc., then we could be looking at a pretty sharp corrective move in terms of the Nasdaq, and certainly we'll be thinking about our bull bear zone currently for the week ahead is 18,289, 18,328. Rejections from there should see us testing into the ascending trend channel support back down to 17,900. Where again, I'll be watching for bullish reversal patterns. It's an opportunity to engage on the long side, looking for a retest of our bull bear zone from below, and then a retest of the prior cycle highs and into that monthly and weekly projected range resistance. 18,729 is going to be the target zone for this move. We do still have the upside equality objective at 19,700 to play for whilst we maintain this bullish trend channel. So that's a more that I would suggest is a medium term target with respect to the Nasdaq at the moment. So for this week, we're looking to see if we can get acceptance through the bull bear zone to target retest of price cycle highs. Bearish reversal patterns here to engage on the short side, looking for a test of trend channel support where once again we could try and build some further upside momentum. This stage, any close back through monthly projected range support 17,800 would be a bearish development, targeting weekly projected range support 17,600 and the value area low for this profile at 17,400. Wrapping things up with the Dow Jones, fairly clean setup here with respect to the Dow Jones. So whilst we maintain resistance at the weekly bull bear zone, which is 39,349 to 39,450, I'm looking for a test of this equality objective versus the current swing structure that we are trading within, which would give us a test of 38,868 and the weekly S1 and our trend channel support. From there, watch for bullish reversal patterns, re-engage on the long side, looking for a break up through our bull bear zone to target monthly and weekly projected range resistance coming in just below 39,900. At this stage, any closing loss of the trend channel support will set up a deeper corrective move back down into the 38,500 to 38,450, which is monthly projected range support. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.